Hello, I'm Thomas Choi, Executive Director of CAPS Research, a joint venture organization of Arizona State University and Institute for Supply Management. We are here today with Professor Dale Rogers, who recently led a CAPS Research focus study project on supply chain financing. Supply chain financing looks at the movement of money behind the scenes. We collected data from Fortune 500 type companies, fintech companies, non-traditional lending sources, as well as major banks. There were two other project members besides Dale Rogers. They were Rudy Leuschner of Rutgers University and myself from Arizona State University. So Dale, we've heard so much about supply chain financing. Could you tell us in brief words what that actually is?
Well, our definition of supply chain financing is using the supply chain to fund the organization, and sometimes using the organization to fund the supply chain. You know, it used to be that supply chains were used to just make, source, deliver, and really now you're looking at the supply chain as a great source of capital, and you're using it to pay for things that perhaps you wouldn't otherwise be able to do.
Mm-hmm. So having said that, what would you say were some of the primary motivations behind the study?
Well, there's been a lot of research over the years behind the two of the three major flows in the supply chain. So there's been a lot of work obviously done on the product flow, a lot of work done on the information flow, but not as much done on the financial flows, which oftentimes structure the other flows. Sometimes it structures the whole supply chain. And so we really wanted to look at, well, what are some of those financial flows and how are companies using their supply chain as a financial instrument, really?
So having talked about the definition and the motivations, let's think about a potential company wanting to implement supply chain financing. What would you say the type of gains that this company might be looking at?
Well, an important one is funding the growth of the organization in an alternative fashion. So, a lot of the growth for many of the firms that are CAPS members or large companies elsewhere is the fact that their growth is happening outside of their traditional markets like North America or Europe. And so using your supply chain as a source of capital to help you fund the growth in some of these markets that maybe can't support themselves to start with is a good way to actually allow the firm to grow and thrive.
So having completed the study, what would you say some of the major findings were?
Well, an important one is the cheapest capital can often be found in the supply chain. You compare supply chain capital to debt capital or equity capital. It's always great to get cash, but debt and equity capital can be expensive and also quite limited. And so some of the best capital can be found inside the supply chain. Another finding is firms are looking to an efficient and effective supply chain to really fund the growth of the company, like we were talking about growing in other markets. And companies can't only be dependent on revenues and financial management to grow profit. Instead, you really have to look at supply chain management, where many of the assets are housed, to help you become more profitable.
Thank you, Dale. The full report contains the major players in supply chain financing, and it also lists key supply chain financing techniques companies have used over the years. Please do come visit us at the webpage we list on this slide. Thank you very much.
Thank you.